What do the terms issued, outstanding, and fully diluted mean with regard to stock or ownership interest in a corporation? Well, to begin with, we're talking about shares of ownership or shares of stock in a corporation. Now, the number of shares of a particular corporation are known as authorized shares. So in the articles of incorporation, the founders will identify the number of shares that are authorized when forming the corporation. Now, of these shares, the founders will issue, or the corporation will issue shares to investors. And initially, these are the shareholders, the founding members who put value, work, time, money, etc. into the corporation in exchange for an ownership interest. And the ownership interests that they receive are issued shares. So not all of the authorized shares are generally issued. It is quite common for corporations to reserve a portion of their authorized shares for later distribution. Okay, so the shares of the authorized group that have been actually distributed and are now owned by shareholders are issued shares. Now, as part of the growth of the business, it is quite common for the organization to reacquire shares. Sometimes there are stock splits that increase the number of shares. There are transfers in the number of shares. There are mandatory buybacks of shares or redemptions. There are a number of different ways in which the number of shares that have been issued will change, and some of those will come back into the company or be held by the company as treasury shares. Now, the number of authorized shares hasn't changed, but the number of issued shares is different from the number that is actually out there. The number that is actually out there is known as outstanding shares. So these have been issued and are still outstanding. Any of them that have been issued and reacquired are in treasury shares. But once again, the number of authorized shares has not changed. Now, the company can change the number of authorized shares in the event of a stock split or in the event of simply wanting to create a new class of shares to give to investors or whatever. And this is done by amending and restating the articles of incorporation and amending the bylaws to account for those. But that being said, this is how authorized, issued, and outstanding shares terms are used. Now, another term that's relevant is fully diluted. So oftentimes companies will issue stock options or preferred shares that have conversion rights where you can convert the class of preferred share into common shares at some multiple. That is, one preferred share might be 1.5 common shares or something like that. So when you're doing this calculation, the conversion calculation, or you are somehow determining whether anti-dilution provisions protect a given shareholder, then you're going to want to calculate the total number of outstanding shares. And when you hear the word fully diluted, what that means is you are identifying all of the shares that are outstanding if all of the options to purchase shares were executed, all of the conversion rights on preferred shares were exercised, and the preferred shares outstanding were converted into common shares at that point in time, and any warrants, which are very similar to options, the ability to purchase shares in the company, are executed. So this creates or increases the total share base in the company for purposes of calculation, because if all of these types of ownership interest or right were executed, the total number of outstanding shares would generally increase. So that's what it means to be fully diluted, and you use this fully diluted calculation of the number of outstanding shares when assessing, once again, conversion rights and anti-dilution protection rights. So that's what these terms mean: issued, outstanding, and fully diluted shares of stock in a corporation.